Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are higher this morning after a little bit of a roller coaster ride yesterday. Markets ended lower after comments from the Dutch finance minister that the Cyprus bailout could possibly create a template for other countries to follow. What do you think about that, Scott?
I think that when he did make his statements, our markets just started falling out of bed, and a lot of the overseas markets started to get a little beat up as well. So somebody might have given him the little phone call saying, listen, that was a little bit too harsh. But I do think overall, the landscape has changed a little. Okay, one of the terms that I took out of it was instead of bail out, they're calling it now bail in. So different terminology, different structure, and I think that's going to be more of the structure moving forward. Maybe not the same where they do a 30 to 40% haircut on everyone that has 100,000 in savings or whatnot, but I do think they're going to hold some of the weaker nations that might take advantage of the system more accountable and getting everyone involved, so then maybe everyone is invested in change. But overall, I do think that the market took it in stride, and we'll continue to see how things develop moving forward. So I wouldn't just be like changing your overall stance, but just know there are some risks out there. So you need to have some longs on, some shorts on, and continue to manage your positions.
Markets definitely took it in stride, but they did react to the comments for sure. So would you say that Cyprus headlines will continue to drive this tape, at least for the meanwhile?
Yes. Especially in a thin, low volume week when most people are on vacation. I think I sent out my note today. I got like 10 responses, like out of the office, or away from this to that. So it just shows you that in a thin environment, you have to listen up for headlines, and you also have to know your levels and know what you're looking at, because a good short, in the morning turned into a buyable dip, and then turned into, if you pressed your short, into support, you probably didn't make any money on your initial, entries. So right now I feel like it's hard to buy strong stocks, and it's also hard to press shorts or weak stocks. So I would just do a little less of both, but stick with the direction, because there are stronger stocks out there, and there definitely are weaker stocks out there.
Well, speaking of knowing our levels, what are the defined levels that you think we should be looking at?
Well, depending on the time frame, there are two trends. So the accelerated trend, if we look at right now, is sort of bent. Okay, if you look here, you go to the chart, you'll see that here's the gradual trend that's been in place since early November. Okay, that we didn't even come close to testing during this supposedly volatility and end of the world craziness. Here, got a little closer. If you remember, this is when the Italian election started to be front and center. This accelerated trend line that we've been following for the majority of 2013 got pressured. And what happened? We only had about a 45 handle move lower, where we took the 8 and 21 day, but then reversed. And then this is when we held higher, saw some commitment, and you could have got back in some positions. And then remember, we said, how do you handle resistance? Well, we busted through 1530 right there. Okay, and then that continued our little march to the upside. So here's your next accelerated trend line. From here, we've had about a 3-day controlled pull-in, and now it's been a little wishy-washy in the middle with some cracks in the base. But right now this base is still holding. So I would say trade against 1543, 1538. If this starts to give way, we could see another move down to the 50-day. But if we stay above it and do some sideways action and continue to absorb headlines like we saw yesterday, next time we try and take out 1560, there'll probably be more success.
Well, as you said, there are strong stocks out there right now and weak stocks holding their 8 and 21 day, and then stocks showing some weakness that have now fallen below their 50 day. So let's start with some stocks that are showing some strength. Bank of America looking good among the banks, and it now has dropped below its 8-day. Next support's 21 day. Do you think it'll hold there?
Yeah, it's not always going to be accelerated from the 8 and 21 day. That's why entries and exits do matter, even in the highest quality of names. And we've been talking about Bank of America, since $8 over the summer. And if you look where it is now, I got some emails yesterday saying, "Oh, Bank of America is weak. It's weak." I'm like, okay, it's weak for the day. And yes, we've had 3-4 day controlled pullback ever since I think Beauvais and some of the higher name guys came out and were really bullish on them. But anyway, so here we took back the 8-day, and this is the 21. Okay, look at where we came from. This was the last time we had a really nice tight pattern at 995. Then you had a really nice bull flag. Okay, and then we consolidated again in this channel, which we broke above. As a short-term trader, would you like to see it hold this? I would say yes, because I'm long it also, but I think would be more exciting is if you could be a buyer at the 21 day, which is about 1220. And if we do get a lot of weakness in the market, I think that this 1182 50 day will be a steal. And these are two areas to write down, because I think they'll be buyable, not sellable there.
And then there's LinkedIn, which we continue to call a best in breed. It's proving that follow through, though, is tough in this market. It raised most of Friday's gains yesterday. It's trying to hold on to its 8-day. Will it be able to keep doing it?
Well, this is one of the signs that, or frustrating signals that momentum traders are getting, because it looked great on Friday. It looked like it was breaking out the highs and then opened lower yesterday and couldn't find a friend. If this stock was going to continue and bust through, okay, the all-time highs short term, it wouldn't have done that. But it retreated back into this upper base, so it needs more time. So some people are screaming bearish on it, but it just might need, again, the market's not letting some things break out. And if you look here at LinkedIn, you'll see that it's had a huge move since earnings. Then you had a nice, bull flag add-on trade here and here, and now it's just getting choppy up here. So do less, have less shares on. It was a nice trade above this little resistance, but then boom. If it was gonna hold in there, it should have held like 178, 180, and then maybe we could have taken out the highs, but by it retreating back into the base, I think some traders are gonna take it off the A list and put it back on the B list. And here's a 21-day playing catch-up, so as long as we stay above that, I think high-level commitment will stay intact. But if it breaks that, again, look where the 50-day is. So you need to know your time frame.
All right, and then there's Visa, which after a few faulty signals recently managed to rally yesterday 2.44%. It put in a new all-time high and closed at high. So should this be on our radar for continuation today?
It could be. And yesterday it was the breakout day. I had a very astute, sophisticated trader next to me yesterday who was pointing out during the pullback in the S&P, Visa didn't inch down one, and he knows who he is. So he had a nice call, and we wound up closing on the highs there. So if you look at Visa, you will see, boom, look at this nice higher level base. We've been watching it for a while, and finally had some power, broke above it. So now I would say, to show commitment, like you saw it in some other things, I would say it needs to hold above this 160, 175. So it needs to do some work above this and continue, or perhaps, just takes out yesterday's high and continues right from there. But overall, I'd like to see a breakout get maintained, because lately you're having a breakout and then it's giving it back, which is a faulty signal. Let's see if we see a more positive one here with Visa. And then I guess, put MasterCard on your radar also. Broke above a small intermediate level, but it hasn't taken out the big resistance the way Visa did, and that stands at 530.
And lastly, Boeing also showing some strength. It has had a controlled pullback into its 8-day. How strong does it look to you now?
I still think it's strong, and entries and exits, we talked about getting above 77, 78, and then I sold mine, I think somewhere around 84, 85. And if you look here, the chart was beautiful to enter the year. It was in my 2013 projections, because of this nice sideways channel here. So this is when it broke above. That's why you want to have levels in front of you and able to act quickly. And now it's had somewhat of a controlled pullback to the 8-day. So I would say if you did not buy Boeing in here and you wanted to buy it, this is a spot I'd rather see you buy than chasing the excitement. But I wouldn't go in full force or 100% in what you want to get allocated there, because it could work its way to the 21-day. So maybe a feeler here, and then if it were to get to the 21-day, that would be a good full tier 1 or maybe even a tier 2.
And coming up, we're going to go on the flip side and take a look at stocks showing some weakness that have now fallen below their 50-day. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with stocks showing some weakness, stocks that have now been trading below their 50-day. Let's start with Goldman in the banks. The banks have been an important sector to watch for clues about market direction, and Goldman has been a weak name within that sector. The stock closed down 0.33% yesterday, continues to hold recent support and is trading below the 50-day. So what are the key levels to know here?
First, I want to go over a little bit of why I think the 50-day is significant.
Sure.
And that's when stocks are trading below it, you need to take notice. Some people out there sell or use the 200 days of sell signal. By that time, it's already fallen considerably. I actually get out if it breaks the 8 and the 21. More intermediate guys say if it breaks the 50, they get out. And then if it stays below the 50, then they short it to drive it down to just say the 200-day, where sometimes that's a spot to cover versus sell. But anyway, so the 50-day is important in my opinion for direction, and there's no other stock that's more important out there versus Goldman, which helped lead the bank rally and now has been showing some faulty signals. So if you look here at Goldman at the chart, you will see this is the accelerated trend line that it followed all the way up to this high. And for me, this is when it broke the 8-day, and that's when I actually said, time to maybe get flexible on it, time to perhaps get short. You had a quick decline before coming back up and making a lower high. Then really, it diverged from the group. When the group was, some stocks making new 2013 highs, it wasn't. So the first signs of weakness in the market, it broke below. So guys were using this level as a short, or at least as a high level stop, that 150.70, then broke the 50-day right here, and now we're hovering below it. I think the next few days should be key for this because, some guys said, okay, I'm going to buy it versus low 144.68, which, all right, decent spot maybe. But if this were to break this low and continue down, I think this will give us some clues that 1538 in the S&P might not be holding, that some other bank weakness could take place. And it's just something good to watch as a barometer. If it gets back and reclaims these, these moving averages back above 150.30, then I just think it might have needed time to consolidate what was a huge move. But overall, very choppy, and there's been more money made to the downside versus the upside for now with Goldman.
And another stock showing some weakness, Facebook has been looking weak and looked even weaker yesterday when it dropped below its 200-day and lost the support of all key moving averages. So we'll be able to find any buyers at this level?
This stock, it started off so well in the beginning of the year. It was like 24 or 20, something like 26, 27-ish. And I made money from 24 to almost 31. And then I think I've given it all back and then some, trying to rebuy it back in the 27 area. But if you have stops, you don't let it get out of control. And with Facebook, there were two levels I was watching. So let's go back to the chart. Here you go. This is the cup and handle type pattern that was developing, where you had the big cup. Here's the depth of the saucer. Here's your your handle. This was when it was acting really well. Remember this first move when it cleared this gap level and filled it with authority, and then you had this descending channel. This was the first cup and handle pattern that actually was very well, and we had it on the virtual trade floor, had it long for a while, and we actually sold into the event and earnings because I don't take stocks into earnings. I just take sometimes option strategies. But anyway, since then, it's just been descending again to make a more macro cup and handle. Okay, and at this point, it's still descending. And I know on this little reversal is where I tried to get long it. And I did get long it, okay, right here. And then it looked as if it was going to break above this support. Okay, I'm giving a little bit more in-depth analysis because a lot of people were in this trade with me. And then on this day, I did add. Okay, I added. It looked good. I was like, okay, here we go. And then it got negated when it broke this small trend line. So that got me out of a portion of my Facebook. What I added there, because I didn't want, that was my momentum add, and obviously there was no momentum there. So that got me out right there. And then I got stopped out of the rest of it, right on this day right here. So I haven't traded it since. It's still weak. Now it's below the 200-day. So I would say give it my 200-day rule, where if it doesn't get back above it in the next 2 days and it wasn't a sell trap, then it could continue to just fade lower. So at this point, I have no position. I got stopped out. I advertised when I got stopped out. So hopefully, if you're trading it with me, trade it with me. If you're using your own opinions and you want to stay in it and not honor stops, then perhaps you'll do better if there's some kind of news and it gaps up, and then I'll have to chase it. But for now, it's acting technically weaker. I'm staying away.
All right, let's talk eBay, which fell almost 4%, which put it below its 100-day, and the stock gave up most of its recent gains. So would you imagine that will go lower before we get a potential bounce?
This stock broke a while ago, and it's been trying to repair, and it's still very erratic and choppy. It just had a 3-4 day bounce, and then yesterday's action was very potent to the downside. If you look at the actual chart, there are a lot of different signals here. This was one. Remember this accelerated trend line where it broke right here? Some guys probably got out, some got short there. And if you missed this upper level area, you had this more gradual trend line. That's where you talk about two different types of trend lines, so you have to respect the one. And when it broke right here, that was your way out. So if you sold here or here, maybe you bought back into some support, or maybe you just stayed away, or maybe you just, took small trades. But anyway, here was your 4-day snapback, just engulfed it with a very big, ugly bar here. So at this point, I think it still needs time. Use it as a trade if you're in it from a macro sense, from way back when. It's been a really big winner over the course of the last few years, obviously. But just realize that, also you might be getting some kind of head and shoulders pattern here, where if you look, just to be a little forward looking, this could be the left shoulder, this could be the overall head, and right now it could be developing the right shoulder. So I know, sometimes you hold things for multiple years, but, just use some kind of option strategy if this does come into play, and then, if it does break below, you can also sell some, take some profits. Trends do change at some point, and I'm not saying the trend is over in eBay, but short term, definitely some faulty signals.
Well, and speaking of a chart that's been broken, Amazon stock has been broken for the past week or so.
Yep, this one, I would say, I'll just go to the chart because the levels are right there for you. This is when it opened up on earnings and somewhat failed. Okay, then, we've been doing some active trading strategies here. This was one from the long side when it broke above this 267. Then it looked like it was going to hold higher. It was holding above the 8-day, trying to go sideways, and then it got downgraded. And on that downgrade, it actually affected it. It went lower. And then from there, came all the way into this support. And now it's really not bouncing back that much. You had a small reversal tactically on Friday, no follow through yesterday. So I would say the longer it stays below all these key moving averages, the 260 to 262, the higher the probability it takes this out and wants to test the 200-day right there. And just like eBay, I know on a macro sense, this has been a huge winner. And you've had some of these, corrections that wound up continuing higher. But overall, I think that you have to be a little careful. Actually, as I look at this now, here's this is a decent trend, but they still have that. I would say watch this 200-day. If it closes below the 200-day and doesn't get back above it, you could see a retest of this 220 area that comes into this little support. So just be careful. Don't close your eyes and go underwater if you could use some kind of apparatus.
Another Scott metaphor.
Yes.
Let's do some quick hits. Apple has reclaimed its 50-day last week. How much commitment do you see there? How much more upside can we see?
I still think there's more room. Okay, right now it broke above the 50-day, which was a nice trade yesterday. It was up like $4 or $5 into 470. So I know for me, I had a call spread on and I just took it. I'm going to give Richardson a shout out from the site. He's like, Scott, don't you have option? Isn't your call spread expire or something like that on Friday or this week? I'm like, yeah. I was like, the market's closed Friday, and I think I heard you're going to do a big interview in Las Vegas, which you'll hear about next week on Wednesday afternoon. So luckily I got rid of my call spread. Right near the highs around 469-ish, but I still have the common. You look at the chart and you will see, here's been that descending channel to the downside. Here was a nice trade right around 440, then it held higher. This was your add-on, and then yesterday, you had a small doji type. People are like, oh, isn't that a red dog reversal to the downside? Well, it could indicate a little bit of a pause. I think Piper had a note out on it saying its June numbers might be a little light, but they still think of it as an overweight. So anyway, here's the 50-day. The 50-day now is around 458. The longer it stays above this and goes sideways, kind of like it did here, I think the higher the probability we could see this little peak here, which is 484, and then maybe a test of the 200-day, which could be above 500, but it's probably going to happen, through earnings, not before, if it is.
And Netflix closed the day down slightly yesterday. The range trading is getting pretty tight, though, here. So do you expect resolution to the upside or the downside soon?
I'm not sure which way. I'm going to just hopefully jump on when it does. And if you look here at the chart, two different, conflicting themes here. One, this was a huge gap up on earnings, nice flag, continued, and this is just a long, higher level base before it goes up, or some are saying it's rolling over. You see the 8 and 21, they're starting to roll over. So I think shorts are waiting to pounce if it could, go through this 176, 177 on volume. But I think that if you do get that short, you better be careful and see what happens at the 50-day, which would be a spot to cover. Or it just continues to go sideways, and if we could finally get a move above 187 with some kind of volume and commitment, next time it tries to break out, which it hasn't been able to do, it could have a little bit more teeth.
And gold just doesn't seem to want to stick with its inverse relationship with the market. It dropped yesterday, as did the market. What's the key level it needs to hold?
I think it's trying to hold that 154, 155. At this point, it's still in an intermediate downtrend. It hasn't done anything different to the upside. We had a little bit of a bounce. If you look at the chart here, all it was a bounce from this 150-ish area back to 156, and it's hanging around here. I would give it that. Okay, but it's not showing any power. You still have mounds of resistance in front of it. This is when the intermediate trend line broke to the downside, and now if you just look a little bit more on a macro sense, it's trying to hold, okay, macro support, which comes in right around this 150. So overall, I think this is more important, and this is going to be something that macro guys, not intermediate guys, because intermediate guys probably sold right there, need to look at, because if we break and close below 150, you don't have support all the way down to below 140 and 135-ish. So, I think that'll be key and we'll see how it goes in the next quarter or two.
All right, and finally, Yahoo has had a nice 3-day rally. It made a new high yesterday, ended up retracing a little bit, but still managed to close above Friday's high. So what are the key levels that we should watch?
I bought Yahoo back at the 21-day, and yesterday I sold it. So it was a nice week and a half move, but I've been doing that with Yahoo. I haven't been just sitting tight. Some people have been sitting tight since it broke above 1660, and you're not a professional trader, but you wanted stock showing relative strength. Well, you're doing well there. One of these moves I missed because I was trying to be too cute also. So you look at the chart and you'll see this was the huge move above 1660. Okay, and then from there you had a few different, tradable pivots. Last real pivot that I saw that was viable was right here at 2145. And then when it pulled into the 21-day, I'm like, let me give it a look there. It just pulled in. It's been holding it during the big portion of this trend. So it was a nice buy. And then into the excitement, I sold a little bit because we are extended now from the 8 and the 21-day. So let it play some catch up and maybe I buy it back. But overall, this is a strong stock and a strong trend. Just trade around it.
All right, and wrap it up for us. What will you be watching heading into trading today?
I'm just not going to do too much. I was looking at some of my leftover positions. I'm like, wow, I have like 5 longs left on. I don't love them all. There's no real patterns that I'm like foaming at saying. There's sometimes I come into work, I'm like, oh, I love this, and that. It's tight, it's power packed. I'm going to go after it. I come in today saying I just hope I have a decent day before a holiday weekend that I have to leave on Wednesday for. So I don't see anything that's so super exciting. So I just think that I'm not expecting a lot. If some trades show their face, I'll go with it. I'm just doing a little less, and I'm actually acting like a hedge fund manager now, where I want to just lock in my gains for the quarter. It's been a good one for me, and just want to take it in stride and then get more into neutral and figure out what the next direction is and participate. Right,
and not force it. Right?
Yes, not force it. It's not the time to chase performance for the end of the month or end of the quarter. It's the time to figure out what you did right or wrong, so you're in a better position for next quarter.
All right, thanks so much, Scott. Happy trading, everyone. Have a great day.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.